Wholesale Hotline, where we cover everything to do with wholesale real estate. I'm Jamil Damji.
I'm Brent Daniels.
And I am Pace Morby.
And together we cover the most important parts of wholesale real estate.
Lead generation.
Conversion of sellers into contracts.
And dispositions. Guys, remember when you're watching this show, do us a favor and squad up in the comments.
Make sure that you are liking and subscribing to the YouTube channels and in the Facebook group Wholesale Hotline.
Most important, we want to know we're doing a great job for you and helping you build your business. So go give us a review on iTunes and or Spotify.
So squad up and enjoy the show!
Here we go. Wholesale Hotline number 73. Woo! We are going for it. A little bit of smoke there, a little bit of fog. I love it.
Bring the smoke,
this is exciting, guys. Look at this. I've got this ready. I've got my paper. I've got my pen, because this show is going to be absolutely so noteworthy that you need to take this seriously. You can watch it again and again and again, but as things are starting to unfold, as we start introducing our guest this week, Pace is going to do that for us. As we start getting all of this incredible knowledge and the questions that you have answered, you need to be writing it down. So, Pace, what is today's show about?
It's all about what you need to know about real estate investing regarding your LLCs, your corporate structure, your estate planning, trusts, all the fun stuff that you can find on Mr. Clint Coons' channel. And that's who our guest is today, is Clint Coons from Anderson Business Advisors. I and Jamil actually met your business partner, Toby Mathis, back in, what month was that in Miami, Jamil? February, March?
I think it was February.
So we meet Toby Mathis. And the way we meet this guy is we're like, oh, great, another attorney, another guy that's going to talk to us about whatever. And within 5 minutes of listening to this guy speak, everybody for the rest of the day said, I give up all my time, give all this man my time. And he spoke straight for 11 hours on his feet. And I was blown away. We have been following you, Clint, for a very long time. I actually didn't know Toby. I knew he was your partner, but I didn't really follow his content. I've been following you for years. You are unbelievable. If you are a real estate investor and you have not typed in how to start an LLC or how to structure my company properly and not seen Clint, then you have not been on YouTube or Google or whatever. Clint Coons is unfreaking believable. There's nobody better on YouTube or creating content in general regarding corporate structures than Clint Coons. So Clint, welcome to the show.
Hey, thanks for having me on. You set the bar really high there with Toby, the way you talked him up.
He's amazing.
He's
not as good as you. I'm telling you, he's not as good as you.
He's better.
So guys, in the comments today, we're going to be answering your questions. We're going to be popping them up on the screen and going through and having Clint answer those questions for you. I'm going to tell you, Anderson actually does a lot of things for me. I started an IUL with you guys, or basically, We'll jump into what an IUL is, because most people know what a whole life insurance policy is. We'll jump into an IUL a little bit later. But hey, babe, look who I have on the screen. Clint Coons from Anderson Business Advisors. My wife is a huge fan of you, and she says, wow, handsome. I'm not joking. My wife's standing here right now. She goes, he is a silver fox, is what my wife says.
We just need a bra to come in the frame and hit you in the face. That's all we need right now.
Jeez, now you're saying I'm old.
No, dude, you're handsome. Wow. Okay, so she says, wow, cute, as she leaves the room.
All right.
So you guys are not only setting up my IUL, or you did, but you also are setting up my charity. And I would love to talk a little bit more about all of those things, but we probably should get into the basics. So let me ask the first question of the live today.
Mm-hmm.
Clint, do I need an LLC in order to do a real estate transaction?
As an attorney that sets up LLCs, the answer should be absolutely, right?
Yes.
But the reality is you should. Definitely you should, because people have this misconception. A lot of attorneys will tell individuals, hey, just do your first deal and don't worry about it. Get a few done before you formalize your structure. But I look at it from the standpoint, it only takes one, and it could really screw you up. There was an individual that I met at an event that I was teaching a couple of years back, and she had this, this story. I already know the look in people's eyes when they start walking up to me at a break, that they've got a story to tell, and that stories typically end in tragedy. And hers, she just put in the offer. She was buying 6 short sales from this seller, and she knew all how the deals was set up. And then he had a hard deadline where he had to close by, or else the bank was pulling it off the table. And she was going to gap fund this deal from this guy in Florida who's bringing in the money because she didn't have the down. And so they get down the 11th hour, and she calls up her gapper, and he said, well, my money's still out on another deal. They haven't closed. Try to get an extension. She went back to the seller, and the seller said, sorry, it ain't happening. I have to close on this date. The bank gave me this hard and fast date.
I feel like I know where this is going.
Yeah, she walked away from that deal. Okay, so people think, oh, you're only going to lose your earnest. Nope, seller came after her, sued her for damages, because she knew that was part of the purchase sale agreement. She knew that he had to close on this date, or otherwise the deal was off the table with the bank and deficiency judgments and all that garbage that goes with it. So could that have been prevented? Absolutely. Had she done it in an entity, say an LLC or a corporation, then at least that liability wouldn't run to her personally. It would run to that business entity. And here's someone, she's just starting out. Now she's facing down this lawsuit, and the thought that she's going to continue to go out and invest in real estate, well, that's in the past, because now she has to deal with this. And if they get a judgment against her, it's going to affect her credit. And you don't need credit for a lot of the types of ways you can invest in real estate, but still it's a black mark you don't want to have.
Love it. So it's good advice. I give advice both ways. Here's the thing I would say. There's people that will not take any action on doing a real estate transaction because they don't know, how to set up an LLC, which for you, Clint, it's like putting on a pair of pants. For a lot of us, it's like putting on a pair of pants. But for a brand new investor, they don't even know what the acronym LLC stands for, right? Let alone what state to open it in. Should I elect to have an S corp? Well, the answer is no right out of the gate, because you don't have any income quite yet, right? There's all sorts of things that confuse people. So I tell them, if it's going to keep you from taking action, then don't start an LLC. However, that's good advice that you say bad things can happen to you personally, and now they can track down her with a judgment until that thing is paid off, right? Correct. Would that lawsuit be called, and I don't know, I'm going to take a guess, is it specific performance that they would go after her for?
Well, no, because they're going to just go after her for damages, for the fact that she couldn't close. Specific performance, they'd want to get her to buy the properties, and she's not going to buy these properties because now the bank's involved with that deal. And I've got a few stories like that where clients have come to me with the letters from the attorney outlining out every legal theory in which they can sue them for failure to close as the buyer. But your point is right on. And that's something that, take the attorney hat off. And I just look at it from the investor side when I'm talking to individuals. And I get so frustrated because they'll say, well, I got to get my LLC and I'm missing deals. I'm like, why the hell are you so concerned about the LLC? If there's an awesome deal, take it. The likelihood of being sued, it's pretty small. Okay. It's not likely going to happen. And our portfolio is over 200 properties now. And I've never been sued. Now, it doesn't mean I appreciate the risk and I set up entities to protect myself in case it happens. I've come close, but it shouldn't stop you, as you pointed out, from moving forward in real estate investing. I mean, there's a lot of benefits to having it. We'll talk about that from another perspective, but don't let it prevent you from making money.
Love it. There's an argument both ways, and it kind of depends on where you're at in your situation. For me, if I'm starting over brand new, first thing I'm doing, because it takes a couple of weeks or, several weeks to get an LLC going, I get going on my LLC and then I start working on deals. And by the time I get my first deal, my LLC is probably just about done, getting wrapped up. It's pretty simple, right? Do you guys do entity setup like LLCs and stuff like that? Even like from a very basic standpoint, if I'm a brand new investor and I need somebody to help me set up an LLC, is that something your company can do?
Oh, absolutely. And what you just brought up, you said, we get this a lot. People say, oh, I got to have this set up. I'm making an offer, a couple days or something to that effect. Well, if they live in a state that's going to take a week or two, say it's California, I'll stick them in Wyoming. I'll say, we'll just get a Wyoming LLC and we'll take care of the registrations later in a different state, because I can get that for you in about, I don't know, 10 minutes, and I can have your company set up. So at least you'll have the name and you can make the offer. Or I'm not sure how you typically tell people to set up these deals, but oftentimes say put in your name and or designated entity. So that allows you to close in the name of that company. So if you don't have it right then and there, well, when you come to closing, at least you'll be able to close and assign that contract over.
That's interesting. In 73 episodes, we've never talked about a designated entity.
You did and or assigns?
Well, I mean, we talk about assignments, but we don't talk about designated entity, meaning I can close it in a separate entity and actually write that in because I might not even have the entity set up at the time.
Correct. Yeah,
I
remember
love
back
that.
in 2005 and 6, everybody would write and or signs on there, and then people didn't know who was going to close on it. So what I found is that sellers and mainly realtors as well, when they see that language, they get a little skittish and they don't know if they're actually dealing with the ultimate buyer. Maybe this is a wholesaler who's going to flip that to someone else. And so they may feel uncomfortable. There's too much meat left on that bone. They should have asked for more. You put and or designated entity on there. This is what I always tell my clients. If they ask, your initial response should be, well, my CPA or my attorney told me that for tax planning reasons, they haven't yet determined which is the best place for me to hold this property. And when you throw out the word CPA or attorney in that sentence, they're typically going to back off because they say, all right, this guy's working with somebody who understands that, is at a higher level. And they're not going to look at you possibly like they would if you were just putting in and or signs and you're just fresh off the street.
Is that language just as viable to use for an assignment purposes?
Oh yeah,
and or signs?
That's so when I'm with wholesalers, typically I'll tell them to do the same thing on their agreements. Texas, you can assign any contract you want. But if you're worried that that seller, let's say it was written into your agreement, this agreement is not assignable. Well, if you put in and or designated entity, they agreed to accept the fact that either you or a designated entity of your choosing will close. And an entity is an LLC, a corporation, or even a person.
Love it.
I love it. I think I'm gonna change up my contract from this. Clint, that's great. That's the first big golden nugget right there. Brittany Berryman says, if you get sued under an LLC and the LLC holds no properties, what can the individual suing get?
Air. I mean, that's just it. There's nothing to go after. And that's the beauty of it. I'll see clients that will come in and they'll get this letter, threatening letter from an attorney. They go, what should I do with this? And I'll point to the trash can right at the end of my desk. I'll say, just put it in there. I'm like,
I gave Brittany the same advice on Sunday. I gave her the same. She got a letter from an attorney trying to threaten her about a closing. And I said, just go to bed. Don't even think about it.
Yeah.
It's garbage.
They're all shakedowns is what many of these things are. In fact, one of my good friends is now best friends is an attorney. We met a long time ago. His client was a contractor and the contractor was trying to take advantage of my mother-in-law. And I knew the contractor had no money. And this guy called me up and he's posturing and saying he was going to sue my mother-in-law. I said, listen, I know how this plays out. That's that one free phone call, get out of jail that each client receives. Your client has no money. So I know this isn't going past this. So why don't we just save you some time and end it right here? It's really funny. He says, my client's finances are none of your concern. I said, I'm just trying to help you out here. Free advice. You need to make money as an attorney. And then he hung up on me. But that is what happens. I mean, now we're best friends. But the first time we met outside, in a social setting, you look at me, oh, you're the asshole. And I'm like, why? It's the truth.
It is good advice. We've had a couple of probate attorneys and some other estate planning attorneys on here, and it's kind of the same advice. They just say, the old saying is this: if you have an attorney if there's one attorney in town, that attorney goes broke. If you put another attorney in that town, they both get rich.
Mm-hmm.
Right. And it is what it is. It's the business of being an attorney. Right. And so it's good advice to you, or it's good advice that you gave that other attorney the advice. Hey man, I don't know why you're going down this road. This guy can't pay you. Why are we even going to chase this rabbit that doesn't even exist? Right.
Exactly.
Sam Kemp says, should we just start an LLC or form a full business structure? And if we structure it wrong or want to change the structure later, is it difficult to do so? So business structure he's talking about, Clint and everybody else in the audience, is probably living trust, holding company, LLCs, charity, all those types of things. I know a charity technically is not owned by you, but all of those things would be a full-fledged business structure. And I'm going to give my 2 cents on this just real quick. If you're just starting, don't overcomplicate it. Just get an LLC. Don't go and spend a ton of money, because if you're just starting, the most important thing you need in your business are qualified leads. And if you spend all your money on a full business structure, which you can't fully utilize just yet, you've just wasted money that could have been spent on leads on something that's useless for at least a year, maybe 2 years. What are your thoughts on that, Clint?
I would agree. I mean, so many people get hung up on creating these structures, and then they'll call me up later and they'll say, what do I do with it? I'm like, I don't know. You're the one that created it. Why would you make your life so complicated right now? You're not there yet. You see, the problem where I've come in, or I see a lot with people who are just getting started, they set up the entity, but then their CPA tells them to have it treated as a disregarded LLC or S corp, have it taxed as an S corp. And that's where I differ for investors who are engaging in wholesaling or flipping property, any type of short-term deals. Even if it's a new business you're starting up, I'll often tell them, set it up as a C corp. Have that LLC, choose a tax designation that's to be treated as a C corporation rather than these other forms. And as I see it, the importance for them is that I don't want that activity showing up on my 1040, because when I transition and I start looking at, single family, residential, long-term investing, I want to take down other deals where I have to qualify for traditional financing, I'm looking for bank money. The type of activity that you're engaging in is not a positive on your 1040, the way it hits your 1040. And so I want to see those people keep that off. And just think, if you lost money for the first 2 years and you made nothing, and you put in 20, 30K into this investing through buying leads and everything else you're doing. If you're doing it through an LLC that's a pass-through, that shows up on your 1040. And if you went in to obtain financing, because that's the whole other side of this that many attorneys and CPs don't pay attention to, because I find they're not investors. You go in to get a loan, they're going to look at your 1040 and they go, why are you losing so much money over here? What are you doing? And then you say, well, I flip properties, I'm a wholesaler, and I'm buying leads, and I'm just trying to get my business going. Well, you just went from being attractive to unattractive by disclosing that information, where if it's in a C corp, nothing hits your return. And if you want to get the deduction, I can pick you that deduction up at a later time, because we'll just set it up with 1244 stock loss treatment. We'll go a traditional corp route, and then you can come back and get it if you need it. But the whole thing about planning that I always tell people look at is you got to look at the asset protection. You definitely want to look at tax planning. That's important. But look at business planning. Okay, think long term, beyond just where you are today, what you're going to be doing 2-3 years from now, how you want to see your business grow. Because I screwed myself up by focusing on the wrong leg early on in my career, and it hurt me.
What'd you focus on?
What was that?
What did you focus on that was the wrong leg?
Taxes. I thought it'd be cool to make $500,000 and pay zero in federal income tax, which I did. And then I would tell people, hey, I pay no tax. How many people here don't want to pay any taxes? Every hand in the room would fly up. And I'm thinking, wow, this is cool. Let me show you what I'm doing. And then what I found is that when I would go into a bank to obtain financing, they would look at my 1040 and they say, you make no money. I mean, because there's good deductions and there's bad deductions, all right? Depreciation, stuff like that, it's good because that gets added back in on your 1040 when an underwriter's looking at it. But if you're taking all your money, deferring it, running it out through expenses, and you show zero taxable income, you're not bankable. And I was in that position where I was bringing in cash, but none of it was taxable cash. And so I had to make this transition to start reporting income so I could move my investing up to a different level that I wanted to take it to. I mean, it took me a few years to do it because I always want 2 years of prior returns. And so that still shows up on your return. Anything you can do from an active business side to keep that information off of your 1040, I think is so crucial. Because I remember the space I'm in right now, when I was working with US Bank, and they were just playing with me. Oh, we just need a little more time. And so I got 2 extensions from the seller, 75K, waived my financing contingency. Money's gone hard. So I had to re-up on my earnest to keep this deal alive. And the 11th hour, they walk in. 3 of them walked in, and I knew exactly what they're going to tell me. They said, we're not going to do this deal. And here I am 2 weeks, about 2.5, 3 weeks maybe, away from closing. And they dropped that bomb on me. And I've got 75K riding on this, that if I don't get it financed, I lost it. I'm walking away. The seller said they're not going to extend it again. And this is what I tell, and what caused this is that they saw in my 1040 a K1 from my law firm. This is in 2010, and we took a hit of about 8 to 10% in revenue that year, which everyone did, right? And I looked at them and I said, well, how much money did you lose that year? I bet you lost a hell of a lot more than me. I shouldn't be doing business with you, but you scare me. They left. And thankfully, I tell people this too, I said, have a community bank, a community lender. I use First Citizens here in Washington State. I said, use a community lender as a backup, because I went to that community lender. They wrote the deal in less than 3 weeks, and I was able to close, and I didn't lose my 75K. So it's things like that I found in my own investing. The less the lender knows, the better, if you're looking to work with traditional lines of financing on your deals. If you're not, then it's not going to matter.
Jim Mill's in the process of buying a beach home right now.
Dude, this morning my broker calls me, and he says, hey, I just wanted to tell you that the first lender that we've spent the last 2 weeks working with, they don't want
the person has been calling you 5 times a day while we've been on set.
Yeah. They don't want to do your loan. So I have this other lender. They do bank statement loans. It's going to be higher interest, and you have to pay me my commission outside of escrow, but I can get it done. And I said, you know what? That sounds like a bait and switch to me, and I feel like you probably have approvals from both. So I'm going to call your bluff, and I'm going to Chase. Cancel the appraisal. I'll figure it out. He's been blowing my phone up since. I'm not taking his call. Tomorrow I'm walking into Chase, and I'm going to go get the loan from Chase.
Smart move.
Yep.
Yeah. And, so you're talking about working with Chase. One of the things too that I found with Chase, when you get up there enough and you have enough assets, you may want to consider switching over to JP Morgan. They run 2 sides, and on the JP Morgan side, you can get a lot more deals done. They'll do up to 10 deals on that, typically up to 10 deals, and it's a lot different than dealing with the retail Chase. That's
like private banking, right? That's the JP Morgan is the private banking side. I have to.
That is the key, because Chase, they had me private client services, that type of garbage, and then when I needed it for a loan that I was looking for, they couldn't come through for me, and I found out the hard way not to work with them.
Before we jump on to the next question, I just want to hit home on something you pointed out. So we've talked about depreciation quite a bit on the show. Straight line depreciation, bonus depreciation, cost segregation, and even donating properties to a charity for tax purposes.
Yep.
Those tax advantages actually get counted back in, and they still allow you to stay bankable. So everybody that's listened to us talking about holding rental properties, holding assets, utilizing the IRS code to actually utilize depreciation to take it away from your other sources of income, that does not make you unbankable. It's other things that make you unbankable. So just don't. I saw a couple of comments in there. People were like, oh my gosh, I thought depreciation was a good thing. Clint specifically said depreciation is a good thing. In fact, I could quote him. He said, depreciation is a good deduction. Okay. So just keep that in mind. Now, another question that's come up twice. I think we got to hit home on this one more time before we can put this one in the coffin. Clint, can you see the screen?
I can.
Can you read that out loud for us?
So if the LLC holds no properties and fails to perform on deals closing date, let's say the seller sues for damages, is there anything they can get out of that? No, because they're going to sue the limited liability company.
No.
It doesn't own anything. Now here's where you'd make a mistake. You continue to use that LLC and you fund it to try to do another deal. I wouldn't touch it. I mean, if that was the case, you just wrap it up, throw it away, dissolve that entity and be done with it and move on. Or you just leave it there and you let them just throw mail at it and threats and things like that and get a default against it, and they're never going to collect.
How about we go from the LLC question to a really interesting one? Liam says, can a non-resident set up a whole life insurance policy?
Gosh, I don't know the answer to that one. That would be Greg, my partner. On the
Greg
life
is
insurance.
amazing, by the way. He's who set up my IUL. He's amazing.
Yeah.
Jamil,
those
do you
are great
remember Greg
policies,
and his
right?
wife?
Yep.
Say it again.
Do you remember Greg and his wife? He was the gentleman that spoke the day after Toby.
Oh my God. Amazing. Amazing. Great dude.
Yeah, he was. I don't know how you guys are like the Avengers of estate planning. You guys like assembled all the superheroes all together.
Well, I want to know where Greg gets his suits made, though. That guy is sharp.
Yeah. Well, he's living in Miami now. I get there's a lot of tailors down there.
A couple of really, really good questions in here. Let's do. Somebody talked about a $500. It was Claudio, one of my students. He brought up a $500 LLC, and I know California, I believe, is $800 to start an LLC. Is that correct?
Claudio said in Massachusetts it's 500. Yeah.
There he is. There's the comment. So, Clint, let's say I'm in Massachusetts, I'm in California, and I want to hold property. I'd like to get an LLC set up.
Mm-hmm.
Is there a clean-cut, dry answer to where I should set my entity up? Do I use a land trust to do certain things? Like, does it get super complicated, or is there something super simple? I live in LA. I want to own property in, let's say, Texas. What should I do? Should I get an LA LLC for $800, or should I do something else?
Well, I mean, you're right on, right? We can make it as complicated as we like, but at the end of the day, how much are you really saving? And so I often look at investors and I say, listen, this is just the cost of doing business. Okay. You know, if you want to save $500, but you're going to complicate your life to the fact that when you try to sell a piece of property, you have title, screaming at you because they can't figure out who's the owner, who's able to sign on it. They send you checks. I got one right here that come in like this. That's made out to a trust that you don't have a bank account set up for. So now you just sit on this thing because you got nothing, nowhere you can deposit it. So when you're getting creative, those are oftentimes the things that people don't think about. For example, you brought up Massachusetts. Here's what we could do. We could set up a land trust, put the property into a land trust, take the land trust and have it held by a Wyoming limited liability company. And I have a lot of clients that have done that because they want to avoid the $500. I often tell them, I said, listen, that's a cost of doing business, right? Just figure it as an investment back into your business. But for whatever reason, now they don't want to pay the state that money. So we find an alternative route. For some of them, it works really well. I mean, they'll go get the bank account set up. They've got a relationship with the bank. But other people, they'll go down to the bank and they'll try to open up a trust account for their land trust, and they'll give too much information or, misstate exactly what they should be telling the bank. And then they can't get a bank account set up. And, and then now they're pulling their hair out. And so that $500 at the end of the day, is it really worth the frustration that it could potentially create for you? And so that's why when I evaluate a client, for some, I just tell them, no, just keep it simple, right? You're in California, you're invested in Texas. Are you going to do multiple deals there? Maybe we'll set up a Texas series LLC. And if you're so concerned about that $800, what I'll do is I'll create a Wyoming statutory trust and we'll dump that into the statutory trust. So the statutory trust would be the member of that Texas series LLC. That way, California could never come after you for the $800 franchise fee because you don't own it.
And California is $800 a year. Is that correct?
It is. It's $800 a year.
So that's where people get really tripped out, right? Where they live in LA or they live in California and they say, look, I've got and the way you advise, Clint, I've watched your YouTube videos. Mm-hmm. I don't know if it's changed or if you still believe this, but you've made pretty strong suggestions to own one property per LLC in the event of a domino effect, right?
Yep, that's correct.
I have made the personal decision to keep 20 properties per LLC, but that's a personal decision, right? So you and I have a little bit differing. It's a risk aversion for a lot of people who are brand new. They can't handle it. For me,
Clint's face says
I know. I've had these conversations with Toby.
You're about to get it. Paige.
I've had the conversations with Toby when I'm talking about this, and he's like, look, it all comes down to a personal decision. But here's the thing is if you own 20 LLCs in California, that's $16,000 a year in fees every single year. Not one time, every single year. And so you do get clients that it does end up saving them a lot more than just $800 for one LLC. It turns into a major cost saving. So from a very simple standpoint, no land trust, just setting up an LLC somewhere. Can I live in California, start a Wyoming or a Nevada LLC, and own property in Texas?
It has to be registered there. I mean, you can do it. So I see this a lot. People jump online, they go to these little internet entity mills, and they create a Nevada LLC, and then they own their property in Illinois. And everything's going just fine until that tenant decides, you know what, I'm not going to pay your rent any longer. So you bring that unlawful detainer action to kick that tenant out. And they have that public interest attorney that hangs out at the courthouse, that makes an appearance on their behalf and informs the judge that your LLC, it's not registered in Illinois. Therefore, you cannot bring an unlawful detainer action. So now you just gave your tenant a couple more months of free rent because you're going to have to go get that thing registered. And then how does that make you look to the court where you're an out-of-state entity operating illegally, essentially?
Slimy.
Exactly.
Slimy.
And so that is a trap that a lot of people fall into when they look to Nevada or Wyoming. So you brought up the California example. If you had 10 properties in California, I would set up 10 statutory trusts. They're not subject, or 10 disregarded LPs. They offer you the same protection, but they're not subject to the franchise tax.
So guys, if any of this terminology, which I guarantee it is, our viewer count continues to climb. So people are really enjoying Clint. We're well past 300 live viewers between a couple of our streams. So guys, thank you for tuning in. But if any of this terminology goes over your head, Clint's YouTube is, I'm not exaggerating, I've probably listened to 300 plus hours. I've probably, from my YouTube videos alone, I've probably bought you dinner a couple of times, just saying. So if you get confused by some of this stuff, go watch his YouTube channel. We're not going to deep dive on everything. Here's another question I have, very simple for most wholesalers. Let's say I'm wholesaling, right? And wholesale is a great way to get into real estate and understand real estate, but it's not a great way to build massive wealth unless I start holding properties. So I wholesale, let's say 3 or 4 months, and I decide it's time for me to buy my first rental property. Should I already know the answer to this, but we're going to say it out loud for everybody to hear. Should I hold that new rental property in the same LLC that I've been wholesaling in for the last 3 or 4 months?
Only if you want to potentially lose it.
So no.
No, not at all. Set up a new LLC for it.
And why, Clint, why is that? Why do people feel like that's the way to go? Is it because they're typically lazy, or is it because they don't know, or is it because they're trying to save money? Because I can imagine you guys have a lot of clients that just bundle all their stuff together. When they come to you, they have like 85 different things in one LLC. Why is that? Is it they just don't know because they don't teach this in school, or is it just because it takes time and they don't know who to go to?
I think it's the latter is typically what it comes down to. It's just time. You get so wrapped up in your business and the closing, and all of a sudden it's sprung on you. You need an LLC, and you're thinking, all right, what am I going to use? Oh, I've got one already set up. And you just give them the name, and you intend to fix it after the fact, but you get so sidetracked on your normal everyday business that you forget to go back and do a top down on your structure. I mean, I'm guilty of doing stuff like that as well, because we have so many entities. I'll have to go back through there. We have a secretary, Toby's secretary actually does all this for us, his assistant, and she's always straightening things out because we're in the deals, right? We're writing the deals. If we don't have something, like, here, take it here, and then we'll just move it as soon as it's done. So that's, I think, a lot of the reasons why people end up finding themselves in that situation.
So you have, go ahead, Jamil.
No, I've got an example question. You first, please.
The 200 properties that you have, they all have their own LLCs?
Hell no.
Okay.
I'd never do that. This is where, when you said, Pace, you said 20 per LLC. Mm-hmm. So the way I explain it to people when it comes to asset protection, this was a fundamental shift for me, because if you watch my videos or came to my events 15 years ago, 18 years ago, I would tell people, put 5 properties per LLC, no more than $250,000 per equity, or $500,000 per equity, whatever your risk tolerance is, and just group them. And the reason I said that is because I was making a value judgment for the individuals, because I was factoring in the cost of setting up an LLC. Like we were talking about, if you needed 5 LLCs, maybe that's $6,000. And that's a steep ask for someone, I figured, to do that, to protect them. And so I would say, just look at it from an equity standpoint, that if something went wrong. And then it really struck me with my own investing when I started looking at my own portfolio. I don't invest for equity. I buy these homes for cash flow. And in equity doesn't matter. I mean, it's great to have it, right? But if you're trying to build legacy wealth and you're trying to create a portfolio of properties that's going to replace your current income, it's going to do things for your family, send your kids to school, what you're going to retire on, and you're grouping your properties together, you're risking your livelihood there, your plans. Let's say you want to work yourself up to 10 properties. You figured all this out, that when you get to 10 properties, I'm going to quit my job, or my wife's going to quit her job. And so now we have that replacement income coming in. And you got all 10 in one LLC. And then you have that example I give a lot is about one of our clients. One of his tenants was a meth head, and he was cooking meth, and he died. I don't know, fumes or whatever. And the place burned down. And so I'm not sure if he died from the fumes or the fire, but they came in and the fire marshal said, well, you didn't have any working smoke detectors in your unit. Well, of course he didn't, because the tenant had disabled them.
Classic tenant move, dude. Classic tenant move. When it starts beeping, they, instead of going and get a battery, they just tear it off the wall.
Well, I don't think, I think they took the battery and they threw it in to make the meth. That's why
probably.
So he's fighting this wrongful death action. Just think, you had 10 properties in one LLC. That's coming after your LLC, and who knows what environmental contamination that could have caused as well, that you'd be liable for, and your insurance isn't picking you up on that one. So in that scenario, if you quit your job and you're relying on all that income and you lose 10 properties, where are you at? You're back to square one. And so what I tell people is that when you're starting out, you need more protection. I ask people, I go, who needs more protection? I have 200 properties, you have 5. And they'll say, Clint, you need more protection. No, I really don't. You need more protection than I do, because I can put 10 properties in an LLC, and I could take a 10-pack and I could lose all 10 properties. And it's not going to stop the type of wine I'm drinking, or where I'm going tomorrow, or what I'm doing in my life, because I have so many more, 19 other LLCs producing income for me. Where you have your 10 properties that you just started off with, you have one devastating lawsuit, you've lost all that income. And so I say there's kind of like a critical mass. When you get up to, I would say 20, 25 properties, then start grouping them, so you can start breaking them up a little more, because now you've got the income flow to manage that. I think it better if something were to happen. And so when you said, Pace, you have 20, I'm like, that's fine. I'd do the same thing if I was at your level. I'd put 20 in an LLC, because you have so many, you could lose a 20-pack. And it sucks, but it's not going to change your life.
It would give me some good YouTube content. How I lost $4 million in real estate. By the way, this is the first flip I've ever lost money on right here. These are the closing documents. I just signed on it. We lost $15,000 on this deal. It happens, guys. Bad things happen on real estate transactions. They really, really do. And when you're first starting out, you got to make sure you're setting this stuff up properly. So here's what I've learned is that you probably say the words, it depends, more than you say anything else in your life, right, Clint? When somebody asks you a question, you say, well, that probably depends. Is that this comes down to a personal situation for a lot of people. Where are you at? What's your income level? What's your experience level? What financial backing do you have? Those types of things truly do need to be brought up in a conversation with a professional, which is why we bring people on like Clint Coons and other people like Rylas Dana, who's a probate attorney who's been on here multiple times. We bring professionals to you guys to make you guys feel comfortable about having conversations with people about your individual situation.
Yeah, and to that point, when you're having a conversation with someone, I think the biggest question a lot of people have is, how do I know that the person I'm talking to understands what it is I'm doing? So if you're going into an attorney or a CPA, ask them, do you know what wholesaling is? And if they think, oh, you can't, wholesaling, that's illegal. What are you going to do with prostitutes? You're like, no, don't. you're missing out.
Wholesaling.
You don't understand what I'm talking about, do you? So that's a red flag. You know, if you were into house hacking and they think that's an illegal activity, then they're not the people you need to be associating with. And so you need to interview them, ask them, are they doing what you're doing? Do they have clients that are doing what you're doing? And if they do, and they understand that terminology and you don't have to explain it, then you're probably going to get some good advice. But if they're baffled by it, then you need to keep searching elsewhere.
Jamil, you had an example question.
Yes. So the property that I'm buying in Los Angeles, it's a second home for me. And I'm wondering, you know, there's this getting financing versus putting the property in an LLC. And I want to be protected. I want to Airbnb the property, but at the same time, if I put the property in an LLC, the LLC can't get financing because it has no history, it has no income, it's kind of bare, right? So how does that work? How do you get around the financing issues of being able to, you know, do that and not just put stuff in your personal name so that you can qualify?
Well, that's tough. So it's going to depend on what type of broker you're working with to close on the deal. If you're going with just a standard mortgage broker, or you're looking to work with a big bank, they're typically going to write a Freddie Fannie conforming loan because 90% of the mortgages get picked up by Freddie and Fannie, so they're going to sell them off. And so they want to make sure that the loan that they're writing conforms to their underwriting guidelines. And therefore, you're not going to be able to close in an LLC on a residential property because it doesn't meet their commercial standards, which would be 5 units and greater. So now you're stuck closing in your own name. You know, they're going to trace funds and do all the little tricks that they like to do to make your life more difficult. But if you working with a portfolio lender, say a community lender, where they're going to keep that in-house, so they're not concerned about Freddie Fannie guidelines, underwriting guidelines, they have their own. You're going to find that those types of institutions will allow you to close in an LLC before the other ones will. And that's what I tell people. If you're looking for financing, go that community portfolio lender route rather than working with the traditional brokers that are out there, because
they're a little bit more expensive though. They're going to be a little bit more expensive. Yeah.
Yeah. So here's the thing. So with that type of deal, if you were asking me about that, which one would I go with? If you're not looking, I mean, if you're just going to close on it and you're bringing all your own cash in, and we're not talking about hard money that's coming in or a bridge loan to put this together where you have to do an automatic cash out refi, then go with your traditional lender, set up the LLC, move it into the limited liability company after you close. Because Freddie Fannie, even on their conforming products that they're writing, you can transfer it into an LLC and you don't have to worry about the acceleration clause. If you looked up acceleration due on sale clause, I mean, I used to talk about this a lot until Freddie Fannie changed their guidelines. You can move it in, but if you want to do a cash out, so like my first deal that I did was in Tennessee with a hard money lender, bought a property there in Memphis. I only had to put down maybe $2,000 or $3,000 into.
Was this a fix and flip, or what were you doing?
Buy and hold. So it was a rehab, so we had to build ARV in it. So the after ARV in that property was going to have the down to do a traditional loan. So we built 20% equity into the deal just by after we got it all rehabbed out. So what I ended up doing is, you know, you had the points and what the hard money lender charged me. They financed the entire deal, got it done. Then I went to a community lender there and they cashed out the hard money lender or refinance. I didn't get a cash out there. They did a refi him out. I didn't have to put anything down because I had 20% equity in the property. So those types of deals are out there if you can find the right lenders to do them. A lot of people though don't, you know, they can't find them. They go more the traditional route. And so they think, all right, I'm just going to do a cash out refi after the fact. Well, if you're looking to do a cash out refi, then you cannot move that property. You have to keep it in your name for a period of 6 months if you're going to do a cash out refi with a Freddie Fannie type product, because they won't allow it. If there's any type of title transfers within 6 months on a pre-cash out refi, it'll kill it for you and they'll make you hold it for another 6. So I analyze the deal and I ask people, well, what do you intend to do with this? Where are you going to take it? And one other thing, I know I'm going to get a little long-winded here. On that Airbnb deal that you're talking about, Jamil, if you do not qualify as a real estate professional and you're setting up an Airbnb. Now, I talked about setting an LLC up and having it taxed as a C Corp. Understand, that's only for wholesaling or flipping, active business activity. Now, Airbnb is considered an active business. Okay, so you can treat it that because your average rental period, they say, is 7 days or less. So it qualifies. So what I do a lot with physicians who typically come to me and, you know, they make all this money, but they have no deductions, will set up their Airbnb properties in an LLC, but I'll set it up as a disregarded LLC. Disregarded, which means it's ignored for federal tax purposes. And we're going to take everything on their 1040 Schedule E. Well, you would. But what I have them do is I said, listen, all you have to do is spend 100 hours on that property and meet a material participation test. If you can do that through this year, we can get you a write-off under 179 for everything you're putting in to get that property up and running. Not the cost of the property, but all the furniture and things like that we run into it. So Airbnb is a unique opportunity for people that are a higher income where they have no deductions. Often say, hey, make your property an Airbnb, write it off through there. And then if you want to change it in a couple of years, you can always change it into a standard rental. And so Airbnb is a unique one.
Can you use it towards mortgage expenses? It has to be furniture and things of that nature.
You can use it 179. Yeah, it's going to be furniture. You're always going to get the interest. You're always going to get those expenses. You're going to write those off anyways. This is going to be the stuff that's above what you're going to be able to write off.
Jamil.
Yes, sir.
I think that you're going to figure that out with a different lender, right? So why couldn't you buy this in your personal name and deed it over to an LLC? Clint, do you think people are really that worried about the due on sale clause in that situation?
You know, some are. And where I'm more concerned about for investors is that, you know, they're going the traditional route is the tracing of funds. You know, where's that money coming from? Maybe you have an LLC set up where you hold your cash. I mean, that's what I have. All my investable cash goes in this one limited liability company, and then I draw the money out. But I always have to remind myself when I'm going conventional mortgage, you know, and working with, say, a Chase, even though I never would, I got to make sure I have those funds seasoned in my checking account for that down on the residential side. So when they look at 2 months of bank statements, they see my down sitting in my account, and they don't see 80,000 just dropping in 2 weeks before I send over my bank statements, because immediately they're going to say, where'd that 80K come from? You're going to say, well, I have an LLC set up that holds my cash. Why do you have an LLC to hold your cash? For asset protection. Well, what type of business is that? Well, it's really not. Well, where's the tax return? It doesn't have to file a tax return. That's impossible. All LLCs file tax returns. I mean, I got emails back and forth with a broker on this when I was closing on a deal. And finally, I sent them links to my YouTube videos. I said, hey, there's this great attorney out there that can explain to you how all this works.
Wow, that's a great way to get people educated. Hey, go watch this great attorney on YouTube.
I didn't get the loan with them.
Wow, that's hilarious. So there's a lot of people in the comments. Guys, we've got 350 people watching live, so thank you so much for being in here. A lot of great questions. What is the difference? I know they can find this out on YouTube, but I want to kind of roll into a secondary question. But what's the difference between a C Corp and an S Corp?
Yeah, so the C Corp files its own tax return. So nothing flows down onto your 1040. If anybody looked at your 1040, they wouldn't even know you have a C corporation. Whereas an S Corp is a pass-through. So whatever money you make inside of the S Corp profit, that's going to show up on your 1040, regardless if you took the money out or not. And so what that implies typically is when you have this K1, when you're looking to borrow, lenders see that. And that's why I told you earlier, you know, if it's a new business and you're starting out, and it's an active business, go with the C Corp and not an S Corp, because those losses, and most businesses are going to produce a loss in their first year, but those losses will show up on your 1040 via that K1. And a lender will ask to see tax returns for your S Corp, profit and loss, and balance sheet. And you know, if you're a new business, maybe you're doing the books on your own, you haven't yet hired a bookkeeper. your books probably aren't the cleanest. And when they look
That's
at
such a polite way of saying that, Clint, because I know you have thousands of clients that come to you brand new, and you know that every client that comes to you has a disastrous set of books or non-existent set of books. That's like 99% of your clients. And nobody's ever told me this. I just know all these small business owners, they'll go buy QuickBooks subscription, but they never actually do anything with it. That's about as organized as most small business owners are. They keep track of it through their bank records. They keep track of it on Excel, and then they hand it to you guys and go, this is what I've been doing for the last 6 years. Can you guys help me figure that out? Is that kind of what you see?
Oh yeah, we see it. Yeah, with the CARES Act last year, we started helping people obtain financing. And of course you had to have a balance sheet and P&L. And some people would write it down on a napkin, take a picture of it, and send us the photo and say, here, submit this to the lender.
This is for the PPP program and all that kind of stuff?
Yeah.
Guys, the reason I bring that up is because I want you to understand you don't need to be ashamed that you have horrible books, because you all have horrible books. Every one of you guys have horrible books. And I want you guys to write, yes, I do in the comments. Please write, yes, I do. And it's perfectly okay. The first step is admitting it and then going and getting some help. People don't understand how affordable bookkeeping really can be.
Yep.
Absolutely.
So there's companies that'll do like $250 a month. There's companies that'll do $500 a month, whatever. Do you guys do bookkeeping, Clint?
We do. And it's, we want every one of our tax clients to be a bookkeeping client because it makes our job so much easier when it comes to preparing the tax returns. But the bookkeeping is the most important aspect of your business, because as you grow, people are going to ask for copies of your books and records, financial copies of that information. And so you have to provide them. And if it's a shambles, you're not going to get it. They're not going to loan you money, because it casts doubt in their mind on A, the authenticity and the veracity of the information you're providing, but B, it's kind of like, what signal are you sending? It's like this, when I'm at an event, people will come up to me and they'll hand me their business card, right? They always want to give you a business card. Like, I'm going to keep all these somewhere. And I'll look at a business card and say, well, what do you do for a living? I flip real estate. I've been flipping real estate for a good year and a half. And I look at their business card and it has a picture of 2 kittens on it. And it's got their corporation name. Now, I'm looking at them and I'm looking at their card, and I don't take them as a serious investor at that point in time. I mean, maybe they said they were into grooming services or cat therapy or something like that. Yeah, that card fits that. So when you're dealing with people, if you're dealing with lenders, what do they expect from you? You need to meet those expectations, and your books speak volumes for you, your business cards, your appearance, all of that is important, I've found, in running the business.
Look at all these comments. These are great. Tony says, books. What books? Tommy says, guilty as charged. There's a really, really good one in here. It is
Jody.
Coloring. What did you see that one? There it is.
Coloring book.
Look at Jody Faye's answer.
Where's Jody's? Hold on. Let's see. Where is that? Is it up higher?
There you are.
Oh, dang, hey. Jody.
Way to go, Jody.
Amazing. So guys, I want to point something out real quick before we get into more questions. So this is what I've done with Clint in the past. Okay. When I was learning, somebody made a comment earlier. They said, this feels like a mastermind because there's so many high level, not analogies, but acronyms being used, terminologies being used, et cetera. So this is what I would do. I would write things down as you hear them. And if you haven't started writing them down, start writing them down right now. Like K1 is something that a lot of new investors have no clue what a K1 is. Wouldn't you agree with that, Clint? That's a very unknown term.
Yeah, absolutely.
So K1, I would write that down. Same thing with disregarded entity or other things that we've talked about. Land trust. A lot of people have no idea what a land trust is. Write these things down. Don't let them confuse you. Now you have your homework. What you need to be doing is now go to Clint's YouTube and type in Clint Coons K1, Clint Coons Land Trust, and you will watch videos about each one of these individual things. Do you have a YouTube video specifically about K1s, Clint?
you know what? I'm going to cut one this week because I just thought about that. I don't. That's an awesome topic.
And you know what's funny is behind stage, Clint was talking about, the hardest thing about running a YouTube channel is just coming up with content that your people really want to hear. There's always something. K1 is a really good one. What is a K1? How do they flow upwards or downwards? I think you guys use the downward way that you pointed out. My brain works differently. I think it goes upwards, but the way you guys depict it with Toby, he's always showing me downwards, which is great. But K1, write these things down and then go do the research on them, or make comments on Clint or Toby's YouTube channels and say, guys, I have no idea what this word is. Can you make a dedicated video for it? And they will. They make amazing, amazing videos. That's how you should be watching Wholesale Hotline. Go through it, take notes, go back and listen to it again. And by the time you understand every word in here, you have literally gained $1 million worth of knowledge in a 1.5 hour podcast. It's crazy how much information there is right here. And you guys have to stop and pay attention and do the research.
Listen, our job on this show, our job with everybody participating here is to find discounted properties. That's what we do. That's how we get to this point. That's why we hire incredible people like Clint and his company to clean all of this up and put us on an organized path. Because you can go and you could read every book on accounting. You could read every book on business structure. You could do that. You won't have a tenth of the experience and the up-to-date information that Clint has inside of his brain and his staff. So it's wonderful to be educated on it. It's wonderful to understand. But I think the biggest education you should be getting is hire your team of advisors. That's what you do. You hire your team of advisors. Now, how do you find the right ones? You get some referrals. You talk to people. You make sure that they understand the business that we're in. But our business, as we're starting out, as most people are here, is just to find discounted properties. So if you want to get all turned around and confused and trying to dissect and become who Clint is, you're going to be distracted. Just hire somebody that's very good at what they do and build a wonderful relationship with them. That's what wealthy people do. Wealthy people have accountants. Wealthy people have attorneys. Wealthy people have business advisors. That's what they do. That's what they do. So if all of this is confusing, if you're feeling overwhelmed by this, the beautiful answer is you have resources. You have people that you can bring into your world as an advisor, as part of your team, and they're going to hook you up.
One of my favorite things about you guys is that you guys actually buy properties. You guys own. From what I remember, Toby was saying you guys bought a mobile home park in like North Carolina as well. You guys are pretty diversified. Yep. You understand your stuff, and you understand your clientele incredibly well. You have a lot of wholesalers that hire you guys. You have a lot of single family investors that hire you guys, multifamily, and there's nobody on the planet, in my opinion, that understands real estate investing in the CPA world as well as you guys do. It is amazing how well you speak directly to everybody. So guys, I just put in Clint's YouTube link in the side chat. Copy, paste that, go subscribe, go watch a bunch of his videos. They are unbelievably good. A lot of bookkeeping questions are coming through. Do you guys, so let's say I'm brand new, Clint, is there a problem with me just using like QuickBooks Online and then giving you guys access to it? What's the most preferred method of bookkeeping when I'm just brand new?
Man, you're just trying to set me up. I love it. So actually we have a product. It's called virtual bookkeeping. And that's what we do. We have the client install it on their side. They enter in all the data, and then my bookkeeper comes in and reviews it. I think it's on once a month we'll go in, or once a quarter. I forget which way the program works, but they go in and they figure out where all the messes are, and they tighten it up for the client. So that it keeps them on the right track, helps them build out their chart of accounts so they know exactly what they should be tracking and where that information needs to be placed.
Guys, write down chart of accounts. 99% of people in here have no clue what chart of accounts means. That's a really good phrase that I wish I didn't know what it meant, but I do know what it means. So you do have to build out your individual chart of accounts, right? For example, let's say I have 100 charges that come through my bank account this month. My CPA, my bookkeeper, needs to know how to put those charges into whatever expense category that I have chosen, right? And every business is a little bit different. Some businesses buy a lot of uniforms, for example. Well, my business might not buy uniforms. So my chart of accounts can be a little bit different than another business. So your chart of accounts, there's like standard numbers for chart of accounts, right, Clint?
Yeah, there are. And this is the thing about it. When you use QuickBooks, you can get overwhelmed just with the chart of accounts setup on that, because they'll give you a bunch of different options and a whole bunch of categories, and it's confusing. And really, for real estate, you can pare that way down for most people. And that's something that, whoever you're working with on your bookkeeping should be able to do for you and say, here are the common things we're looking at. I mean, you brought up uniforms. You're right. You would never buy a uniform, but what you're wearing right now, I notice, has your logo on it. Mm-hmm. So that for you is an advertising expense. So you would put that in your chart of accounts. Where would you, the $800 you spent on your hats and your shirts and your underwear that has your logo on it, okay, it goes right in. Your wife's like, who are you advertising to?
That's right.
It goes right in there on an advertisement of your business. So those are the things that your bookkeeper should work with you on to help figure all that out. And it's important.
So Clint, we're getting a bunch of people in the side chat that say, personally, I need help. You've got right here, Evelyn says, I need a consultation with Clint ASAP. Aisha says, I do too. I have a few clients who may need him as well. So the process that I went through when I signed up with you guys, I got an IUL with you guys. I got a charity. Well, you guys are in the process of setting up a charity for me right now. I spoke to somebody on your team. They were incredibly amazing. They would send me videos. They would look at like my entity structure, and then they would send me videos via email and say, hey, looked at your setup. I know you're busy. We don't need to get on a phone call right now, but here's my thoughts. I have some questions. Type them back. Let's get on a phone call when you need. Incredibly professional, guys. I'm telling you, this is a company that you definitely want to do business with. Clint, if I wanted to set up a consultation, who do I go to? How do I sign up? I was lucky enough to be in a mastermind with Toby and Jamil, and I was able to actually shake your partner's hand and get his personal assistant to help me out, Corey. Not his personal assistant, but somebody directly on his team. Who do I reach out to? How do I set up a consultation?
So what I would do, I mean, since we've already thrown Corey's name out, he's a phenomenal strategist. And, he did your structure. I'll give you his email. All right. And just tell him that you saw me on Pace's show. Get that over to him. Just send him an email. Say you request a consultation. His assistant will reach out to you and set something up. But it's C. Posgay, Posgay at AndersonAdvisors.com. Just send him an email, put on there, hey, looking to set up a strategy session, saw Clint and Pace together talking, and he said you were the guy. So,
but the strategy session's got to be really expensive, right?
Yeah. For you, no charge.
No charge, guys. They're amazing. Corey's great. I probably spent 3 hours combined with Corey before I ever decided to move forward with them. And every single time Corey got on the Zoom with me or a phone call, smiles from ear to ear. Amazing, amazing humans. I've put his email on the screen, cposgay at AndersonAdvisors.com. They are absolutely amazing. And it's a free consultation. So what I would want to do, we have 350 people watching live. 350 people should email Corey right now and say, right now, you guys know how we roll. Every time we give out somebody's cell phone number or email, we blow them up. I want Corey to call Clint and be pissed. Like, bro, what did you do to me? It's going to take me 3 days to answer all my emails. Blow him up. Please blow him up. Corey, Corey is his name. Say, Corey, I just heard your name on Wholesale Hotline. Clint told us to blow you up. When can I get my consultation?
Should we give out Toby's cell phone?
Oh, please.
Yes.
Oh my gosh.
Yes.
Oh my gosh. That would be so great. So I'm brand new. I want to set up an LLC. Am I too small of a client for you guys if I've never set up an LLC? I don't know anything about what I'm talking about. I'm not really like a highfalutin person. I have a budget. I'm constantly thinking about, should I spend my money on marketing or should I spend my money on something else? Am I too small potatoes for you?
No, I mean, the way we approach it is that the client that comes in with one LLC, we know where that client's going to grow into if they're in real estate. And so what we want to do is create a relationship with you. So as your business grows, you're always going to continue to use us to help you in the growth of your business through the creation of another, additional entities. Because I believe, through my own investing, that entities, if they're set up the right way, they can actually help you do more when it comes to real estate investing, or you can accomplish your goals faster. Especially, I keep coming back to that lending side, because the natural growth that I've seen is people start off their wholesaling, and that's generating income. And then when they start generating the income and they have that cash, then they tend to move into looking at generating wealth, which is the accumulation of properties. And so when you move into that phase, you want to make sure that everything you were doing while you're generating that income is leading towards you to help you build the wealth. Because you're not going to use your own money. You're going to run out of money if you think you're just going to continue to buy properties for cash. It doesn't happen. And why? I mean, use leverage, use other people's money. That's what it's there for. So you can scale. And so that structure from the very outset, I think, is really important, because it should be focused on helping you get to that point.
I can tell you, sorry, Jamil, if you guys don't cut me off, I will keep talking. So please cut me off.
I'm next after Jamil.
Okay.
Clint, if you could boil down into a list of 5 things that a wholesaler who's just starting in the business would need to do legally, what would those 5 things be? Just like that they could get out the gate moving quickly, from your experience in working with people in the business.
Well, it depends on how much money you have, right?
Let's assume 10,000 or less.
10,000 or less. Well, I would say no more than one entity. I would set up an LLC. I would tax it as a C corporation, and I would set it up in the state where you live. I wouldn't deal with Wyoming, Nevada. That's just going to drive up your costs, and you're not going to get the benefit you're seeking, because you're going to have to be registered wherever you're living anyways, because you're going to have to take a salary. You're going to be put on payroll. And as you start doing your deals, put your money back in the advertising, start building up your deal flow. And then as the income starts coming in, then you're going to want to put yourself on salary, because you want that W-2
Put yourself on salary. So
Put
the
yourself
second
on
thing they're going to do is put themselves on a salary. Awesome. So like a monthly fixed amount, like $5,000?
Correct. Figure out that amount, and then you're going to spread that income over the year. Because some people say, well, Clint, I just brought in $25,000 on this deal. Okay, but don't take out $25,000 right away. Make sure you can cover that salary now for 5 months, assuming that's not going back into advertising. So you figure out that number. So then you show consistent streams of W-2s. And what this is going to help you do is when you want to move to that next level and you go in to apply for a loan, the lender is going to see that. And they're going to see that you're employed and that you're making money. Because as a W-2 wage earner, you fit into a nice little box. People like loaning to W-2 wage earners. If you come
how long of a stretch do they need to show that? So they're saying you need to take that as as how you get your income. How long before they're bankable, or before you think they can move into the next phase of their real estate investing?
Well, it depends on what their W-2 showed before. If they had a period of time, say a year with a really bad,
it's a 9 to 5 job.
9 to 5 job, I would say within a year, it'd be doable for sure. Because you just got to see that consistent stream of income coming in, and at the right level for the debt to income ratio that they look at.
Should they open a bank account and use that bank account to pay their expenses under the LLC, or should they do it from their own personal accounts?
That's where I was going to next. You're making this too easy for me. So the next thing you want to set up is a credit card under the name of your business.
Love
right?
it.
And what you have to do is you have to ask them whether or not they report back to your personal credit profile. Now, I can tell you from personal experience, Chase, American Express, Bank of America, their business cards do not report back to you. So then you need to shift, and you want to bring your personal credit utilization down and bring your business credit utilization up. So you're going to take anything related to your business, your gas, everything you're driving around, put it on that business card. Keep it off your personal card. Because when you go in to borrow money, they're not going to see the balance then sitting on your personal card, because that's going to be hidden by your business. The mistake that a lot of people make on the credit side, and I was guilty of this as well, is that, I would pay my card off every month, right? But I would let it hit the settlement date, receive it in the mail, and you guys have probably already told everybody this, and then I would pay it off. And that didn't help me, because when they run my credit score, they'd say, well, your average outstanding balance is X. I'm like, no, I pay it off every month. No, you don't. See, you got to get to it before the settlement date and pay it off. And I didn't know that at the time.
So say a person's paying themselves $5,000 a month, and they've got income in the business. They got income now that they're taking home. How do they pay for gas with the money in the business account, not the personal not from the 5,000?
So with that money, if you're paying for gas for driving around looking at deals, pay for it out of your business. Pay for it out of your business. You can always reimburse it if it's personal in nature to your business, but you shouldn't get into a habit of, always putting stuff on the business card. But if you go out to dinner and you're with your spouse and you talk about the business and the deals you're going through, if you want, write it off. Why not? I'd run it through my business. Toby came up with this great line. He said, when in doubt, deduct. And it's in his book. And that's the approach I always take when it comes to business expenses, is I will run as much as I can through my business, because I can find a way to tie it back to make it deductible. So that's what I would do on that side for someone that's starting out.
Love it. Thank you.
Mm-hmm.
That was incredible. That's what I was looking for this whole show, honestly. Yeah. I mean, all the other stuff is great, but just getting it set up and get going. I mean, I think that's the bread and butter there. What do you think that would, and I know California and New York are different, but what do you think that costs, and how long does that typically take to happen, Clint?
$1,500 to set up the entity, and depending on the state, it could take anywhere from a couple days to 3 weeks.
Awesome. Awesome. Yeah. And how do you find your deals?
Hey, well, you guys have found me a lot of deals. So
yeah, they've bought deals from us.
Yeah. We find our deals through wholesalers. People bring us deals. And the reason why we do that is because we don't have the time. I mean, we invest, we do a lot in Winston-Salem and Houston, Oklahoma City. Those types of deals that we acquired in those areas, we would never be able to do it on our own. And so we appreciate the fact that people can find them for us, and we pay them for that, because I don't have to do it and I get a great deal out of it. So I fully embrace wholesaling because I see that as a need for investors like myself that are out there.
Did you just say you're a nationwide buyer for cash flowing deals?
Well, so it used to be that we would do that. We would pick up onesies and twosies all over the U.S. And now we've started to consolidate.
What specific markets? Because you're going to get deals from all of them. And where should they send them?
Right now, it's primarily working in Winston-Salem. That's where we're doing most of our deal flow right now.
Awesome.
So if you got deals in Winston-Salem, do they just reach out to Corey Posgay as well?
No, they could reach out to myself or to Toby, and then we'll kick them over to our buying team in Winston-Salem, and then they will evaluate them.
So when we met Toby,
you can throw your email up and there, and people will send you deals. Yeah,
definitely.
So when we met Toby, he was talking about how you have buyers who are your clients, and you guys have an academy where people come and learn all sorts of stuff. And Toby said, hey, if you guys have deals, we do have buyers all over the country. Is there still an opportunity, or is that kind of gone away?
Yeah, so we're building that out because we realize with a lot of our clientele, they live on the coast, and it's so hard to make money out there in that environment. And they're looking for deal flow, and they want to get something where it's 10 cap or higher, and you're not going to get that out there. So we're trying to introduce them to our clientele on the other side that have deal flow, so we can match them up.
Well, just between Sub 2, my community, TTP, which is Brent's community, and Astro Flipping, which is Jamil's community, we probably have close to 10,000 students nationwide that are all doing deals. In fact, I buy a lot of my deals from TTPers and from Astro Flippers. So I'd love to have a further conversation with you. I know Toby and I talked about it 5 months ago, but we haven't moved the ball on that. I'd love to be able to figure out how do we create a conduit between the two parties.
Yeah, definitely. Because that's part of what we want to do. We want to grow beyond just, the legal and tax services and financial or the insurance stuff that we do, because we want to ensure that our clients that we're working with are finding success and actually finding properties that are out there. And unfortunately in this market, a lot of people spend a lot on education and they never get a property, and they don't move that ball forwards. So that's we've seen that side of the business since we started, and it's our, kind of our philosophy now, and our mission is that we want to build out the infinity side of what Toby's been doing. He started it to start bringing the clients together and the people together. So we want to see them grow their wealth.
Love it. I hesitate to talk about this topic because this is such this is like some of my favorite stuff to talk about. Horacio's talking about depreciation recapture. We could talk about 1031 exchanges or donating your properties to charities probably for the next 5 hours and have a wonderful time, but we'd run out of time because we only have about 10 more minutes. So Clint, would you be open to either coming back here or maybe coming into my community and talking about depreciation recapture for a little bit?
Yeah, I could do that. Definitely. The best person would always be Toby. He's more the tax guy. I can give you more of a higher level on that, but Toby would be the one to really go dig deep and give you all the different angles on it. I'm more the asset protection strategy structuring side of the business.
Love it. Absolutely love that.
Clint,
go ahead. You guys got to talk over me, please.
If a say a company, a wholesaler, is using their business card more often than their personal to pay for stuff because they want to find ways to write it off, and they get sued, right? And then they subpoena the bank records and they say that they're using it for their personal expenses and it pierces the corporate veil, and they go after them personally. Is that a concern?
No.
Okay.
So first off, to pierce a corporate veil, typically the courts are going to look for fraud before everyone does that, right? They make a mistake. They use a personal card or business card for some personal expenses. But if you just have to say, hey, that's questionable, the courts aren't even going to delve into tax matters like that to say, oh, that isn't deductible to the business. So I wouldn't let that be a concern. But to your point, this is something, again, going back to what I was talking about earlier, we're discussing income. I'll consult with people, and again, they want to let taxes, the tail wag the dog. And I explained to them, I said, we can write all this stuff off through your company. It's going to then drop your W-2 income because you're not going to have that money available to pay it out in salary. And if you drop that W-2 income, what's the ripple effect for you? If your goal is you want to start accumulating single families 8 months from now or a year from now, you got to balance it out on how you're going to account for that income, because you need to show strong income depending on the types of deals and how many deals you want to take down.
Awesome.
Guys, I have 1,000 questions always for this stuff. These are my favorite topics. So you guys need to talk over me, or else I will continue to talk.
What's the blue genie?
Look on Clint. Look.
Oh, there he is. Yeah, there he is. Now I got it. Yeah.
Yep. So, Clint, so in California, right? Because I know that there's a lot of chatter about what's going on and how to do business out there, and how can people protect themselves or be as tax advantage as possible. What would you say to a first timer? Because I know we got a lot of people that are doing business out there. What would you say to a new business in California? How should they behave differently from the rest of the United States?
Well, that's just it. I mean, in California, it's just more expensive. to do business out there, and I wouldn't behave any differently. You know, I sat down with a investor doing quite well for himself, and he started with the $800 franchise fee, and I said, you know, I don't get it. You're making $48,000 a year basically on this property, and you're complaining about $800 to protect it, and you want to complicate your life. And I'm happy to make things more complicated for you, because that's just going to make more money for me and more headaches for you. We can do that for $800, because it's always, you know, California, you make more money, but things are going to be a little more expensive. And so if I was starting in California, I would say, listen, if you're going to wholesale in California, you need a California corporation, because in order to take a salary, you're going to have to be registered there to put yourself on payroll. So if you went with me and you said, I want it in Wyoming or Delaware, it's just, you're going to be paying more money for no benefit, because eventually you're going to have to get registered in that state. So that's how I would approach it. Just set your business up there.
So same, just expect to pay more.
Just expect you're going to pay more in California, but you're probably going to make more money too, you know, on those deals. So it's all relative, depending on where you're at.
If you're doing really well, Clint, financially, and the income is going really well, and you want to pay yourself so that you have purchasing power, is the flip side, yeah, pay yourself well, but just buy properties as much as possible so that you can take advantage of depreciation and all the other, you know, benefits of owning real estate?
Yeah, absolutely. I mean, if that's your goal and you understand all those are the benefits you desire, then yeah, to borrow, you want to show strong income, and that's what you'll do. And, you know, up your W-2, start paying yourself more money. So you look better. Maybe you get to the point where you're paying yourself a decent salary. You consider setting up a retirement plan, like a solo 401k. I know that came up down at your mastermind, and doing deals through there. Toby called me at the lunch break on that one. And then you start contributing to that solo, and then you can start building wealth on a tax-free or tax-deferred basis. So it all builds on itself to allow you to do more. And then you move up, you know, Pace, you're doing a 501. And so then you get into charities and you look at that, or, you know, the life insurance product that you brought up a few times, and IUL. I mean, these are all tools. And what I don't want the viewers to think is that, oh, I need all that because that's what they're doing. And that is the wrong approach to take. The approach should be, I need to get a strategy session set up with Corey.
Yep.
I need to have him look at my situation and determine what I need to do. Because so many people run out there and they just set up entities. And I mean, I have conversations with them all the time. Why'd you do that? I don't know. I thought that's what you need to do. Or I heard an investor tell me I need to do this. Or I saw some guru talking about setting this thing up. And they never get the why. And they can't. So you need to explain that to someone who asks you, why are you doing this?
And it's always great. It's always great if the person on the other end is buying deals. Could be a cash buyer looking for opportunities, right? Knows the process, knows what we're doing, knows the income that we're making and how we make it. I mean, it's powerful. This is really cool.
Yeah. So no, go ahead. Sorry, I didn't mean to cut you off.
No, I don't know how many people, you know, work with other individuals if they want a joint venture. I mean, then you want to look at some other ways to structure your business to make sure that each partner is protected. Because, you know, out of 100 people in a room that are talking about wholesaling or flipping properties, I always find 10 to 20% have a business partner, not a spouse, a business partner that they're working with. And you know, if people ask me off the cuff, well, what do you think about that? I often say, don't do it. All right. Never go into business with someone else unless you truly know that person and vetted them. Or on top of that, you put together an agreement that protects you, and the other person needs to be protected as well. Because I've found, you know, I've had plenty of business deals fail because the person you thought was going to do X does X minus 10, and it just doesn't work out. And you're putting in effort and money and it's just not going anywhere. And so those are things that you should factor in and make sure you're building a structure that ensures that you're not going to get into that situation where you're left holding the bag.
In your time as an attorney in this, what's the worst thing you've seen happen to a wholesaler legally, and what lesson can we learn from it?
Well, the one the worst one was the 78-year-old lady that wanted to wholesale property and got the property under contract. She did not have any buyers set up, didn't know who to market it to. She walked away from the deal and they turned around and sued her. And it was all done in her own name. And it breaks my heart because she sends me a letter and she's crying on the phone, just pleading with me to find a solution for her, because the attorney's threatening to take away everything she has and she doesn't have much. And she thought that this was going to be a way for her to start generating some income in retirement. And, there's nothing I can do, unfortunately. It is what it is. So that's the worst one that I've seen on the wholesaling side. And it was one of those, she probably should have set up an LLC, like I said, and it would have changed the narrative somewhat. Then I could kick back on the attorney, but now her best defense is, hey, I've got no assets. What are you going to do?
That's it.
Can you set up increase your salary? Yeah, you can increase your salary as much as you want. Yeah, there's no problem with that. So,
Clint, is there an advantage to one trust per property with the Wyoming LLC as a beneficiary, whether I hold, flip, or wholesale? I'm in Massachusetts.
Yeah, actually, so on the trust per property side of it, trusts don't offer asset protection. So if you had 10 trusts held by one LLC and something happened with trust number 4, then they would sue the LLC and that would give them access to all your trusts. Mm-hmm. The only time that differs is if you're investing in Florida. So in Florida, I typically use land trusts for real estate investing down there rather than LLCs, because land trusts offer asset protection in Florida. So it's knowing the market or the region in which you are located in, where you're doing your investing, on how you're going to set up the structures. Tennessee, so Tennessee is a pickle for people who don't understand. I brought on a client a year and a half ago, and he was paying $45,000 a year to the state of Tennessee because his Florida CPA didn't understand how to set it up to avoid this tax. He's trying to get creative, and he was having layered companies. And so every time he did that, he was creating more taxes, excise taxes. And so they just thought that was the cost of doing business. And I brought him, I said, no, we got to change that. So we're going to dissolve this, move these over here, and I'm going to give you an extra $45K a year just in tax savings. And so those are little things like that can come up if you're not working with someone who understands that market. Just like it is with what you guys teach, right? It's knowing the market.
Mm-hmm. Yeah, it is. I mean, with land trust, they operate different, right? Like Arizona, it's interesting. In Arizona, you can't get a title policy at a title company if you close in a land trust, because they want to name the beneficiary. In Arizona, they say you have to name the beneficiary in order for you to get a title policy. The whole purpose of using a land trust for me specifically is for anonymity. And so we don't use land trust to buy properties in Arizona, but we'll use a land trust to buy a property in a different state. So you can't just say it's the same way in every state every single time, which is why you reach out to somebody, as Brent talks about, and add them as somebody on your board of advisors. And Anderson is on my board of advisors. I learned one thing at that mastermind. I learned 100 things, but one thing I learned, which was donating properties to my charity and doing low-income housing, veteran assistant housing, those types of things. I could have tax-free cash flow in a charity. I could then lend money from my charity to my whole life insurance policy, like Jim Harbaugh does, and save millions and millions and millions of dollars and keep all my money. It was the craziest thing ever. And what was crazy is you guys opened my mind, and then I start reading about all these other people that are doing the same thing. And I'm like, where the hell has this information been?
Yeah.
It is so amazing once you get into this stuff. You guys are in for a treat. You guys have to absolutely watch Clint Coons' YouTube channel. You have to email Corey. He is unbelievable. Let me give you guys Corey's email one more time before we sign out. Jamil, Brent, do you guys have anything else to say before we sign out?
Thank you, brother. That was great.
Hey, thanks. And I teach an event typically twice a month. It's a Saturday. It's a live stream, and if you went to our website, you'll find it. And if you want to learn more, and I break it down. I know I went high level on this one, but I break it down and I make it really simple to understand. At least I think I do. I'm blonde, so it's got to be simple, right? When I go through it, so that's an option for people if you want to learn more. You can come to the site and sign up for the event. I think it's not this Saturday, it's the following Saturday. I do it with Toby, by the way.
Clint, here's the 5 steps. Set up an entity, LLC as a C Corp, in the state that you live, put yourself on salary, open up a bank account, and open up credit card for your business.
That's it.
Those are the 5 steps.
Yep.
Boom, baby. You know what, Clint? Come on.
Ring that bell.
Actually, you got Rocky right here. Just said, let's ring that bell. 2 deals closed, $0 spent. He's an Astro.
Yeah.
Amazing. Clint, we had analytics show that we had nearly 1,000 people tune in. Obviously, people are going to and from work on their way home. People are cooking dinner, that type of stuff. But we have had an average of 380 people watching live tonight, which is great. Really, really, really good. For a Monday night, it's 9:30 on the East Coast right now, and people are still tuning into you. Holy moly.
How did that compare to Toby?
We haven't had Toby on the show. We've had Toby in my private mentorship, and when Toby comes, we max out Zoom. I can't get any more people on my Zoom. We max out at 500 people, but I also email my students right before so they all know, and I have the ability to email them all. We need to get you in my mentorship and have a good time in there. It'll be a lot of fun. And I'm sure Brent and Jamil would love that as well. And we could just absolutely swamp Corey's email inbox and just get tons and tons of people getting those consultations. So, guys, if you enjoyed the show tonight, please follow Clint Coons. Also, if I need to know where the link for your event is, where should I go in the meantime? Because you don't have the link right now, do you?
No, but if you went to andersonadvisors.com, it should have one of our events on there. If you go to events.
We'll post it in we have a private Facebook group for all of our Wholesale Hotline members. We'll post it in the Facebook group, and we'll make sure everybody understands, because it would be cool for you to go through a full entire presentation from the basics. I'm sure a lot of people would benefit from that. So if you guys haven't subscribed to his YouTube channel, please do that. Jamil, when is your show? What are you doing this coming Sunday?
This Sunday, tune in for Straight Outta Comping, guys. Bring your houses. I'll comp them. Multifamily, make sure you got the rents. Otherwise, you guys just have an amazing week. Everybody, keep doing what you got to do. Talk to everybody.
Brent Daniels, who's on your show this Wednesday?
Yeah, Wednesday, it is a surprise, and it's going to be absolutely bananas. But listen, if you had a wholesaling question that did not get answered tonight, I invite you to join at 10 a.m. Pacific Standard Time, Brent Daniels' YouTube channel. We go for 2 hours, action-packed with answers, question and answers. It's going to be so much fun. That is Wednesday, 10 a.m. Pacific Standard Time.
Wholesale Hotline, episode 73. Thank you guys so much. We will see you next week. Clint Coons, thank you so much.
Thanks, guys.
Or just say squat up.